Welcome back. You're watching Buy Now, Sell Now on ET Now, and time to bring on board our experts for today. We have Kunal Bothra as well as Raghavendra Kedia joining us. Good morning, gentlemen. Thank you for joining us on ET Now. And let's bring on board the viewer queries then. And the first query that we've got is from the YouTube, and this is from Ritesh Garg. He wants to take a review on Titan's triple top pattern. He's saying, is it the breakdown is being confirmed? He's saying he has its June 1640 call. So this one is for you, Kunal. This is what Ritesh's query is. He wants to know, is the breakdown confirmed in Titan? He wants to know because he has a June 1640 call of Titan.
So I think I'm sensing that this is a breakout question. The stock is breaking out of the triple top formation about that 1600 mark. It's looking quite strong today. So I think there are two contexts which is very, very important over here. One of them is that with the gold rated stocks like Muthoot Finance, Manappuram, etc. These stocks are looking quite strong, and in that regards, Titan is also showing quite a strong bit of momentum. But that 1600 mark is has been breached on an intraday basis. So maybe wait for maybe another hour or so. If the stock breaks past about the 1600 mark and stays above that 1600 mark for some more time, then we can probably call it as a strong level of a breakout. And beyond that, you could probably be looking at least a 40 to 50 points on the upside. So I would suggest that wait for maybe some more time, and if the stock sustains above that 1600 levels, for the remainder part of the day, then probably a chance of 1640, 1650 on Titan in the very, very short term is a high probability trade.
Okay, there seem to be a lot of short-term questions and questions about technicals, but I'm going to try and balance the two. I'm going to come across to you for this next question, in fact. Raghavendra, just a question on Happiest Minds. It's a recent acquisition, obviously, since the IPO was not too long back. KR Balan has, or rather Rohit has bought 500 shares of Happiest Mind at an average price of 860. Asking whether to hold based on the fundamentals or to switch.
Good morning. Based on the fundamentals, one would continue to hold Happiest Minds. The strength in US dollars versus the Indian rupee will augur very well for Happiest Minds. This recent acquisition will also start showing results by next 2 or 3 quarters. Happiest Minds has a management which has a great proven success track record, and that should be reflected in the earnings of Happiest Minds going ahead. We are bullish on IT overall and believe that this recent listed stock, Happiest Minds, could do well. So continue to hold Happiest Mind at current levels for an outperformance to the market and also to the overall IT industry.
The next query is coming in from Syed, and Kunal, this one is for you. It's a fairly short-term target that he's asking for, and this one is New India Assurance. He's bought it at 165.5 levels. He wants to know what sort of a pattern is the stock forming. Can it reach about 200 levels by June 7th? That's when the results are going to come out, and does it make sense to bet on the results?
So I think we were discussing the stock last week as well, and I mentioned that 169, 170 is the breakout point for New India Assurance stock in the stock price. It's forming a bullish flag pattern, and that pattern breakout is exactly at that point of 170 approximately. So I would suggest that you wait for some more time. Let the stock break past about that 170 mark. Now, whether it happens pre-result, post-result, it's very difficult to contemplate. That, but I think purely on the basis of charts and technicals, I think a breakout above 170, 116 and 170 zone could lead to the stock at least another 20 to 25 points on the higher side. So possibly your expected target of 200 that could reach, but provided the stock breaks past about that 170 hurdle.
Kunal, I absolutely have to ask this, and I know that a few people are actually thinking about it. Sagar is pointing out about Reliance Industries and the fact that it's absolutely on fire. It's aiding the Nifty at this point. What do you have to say in terms of how much steam this rally has for Reliance Industries, considering the fact that we moved nearly 6% on Friday and you're up nearly 4% today?
It's a brilliant move for the stock. In fact, Alex, I recommended the stock on Friday, pre-morning session as well, expecting a breakout for the stock. So there are two important characteristics for Reliance Industries. One of them particularly is the fact that the stock has got back into the thick of momentum. So that's a very strong signal. It's broken past about two important hurdles along the way. So 2000, 2100. These were the two important psychological resistance for Reliance Industries, and the stock was unable to break past above it. The second and the most intriguing factor about Reliance Industries is that typically when a fresh move starts from a fresh expiry, it generally results into the stock going into a multi-expiry uptick. So what happened for Reliance for the last, I think, 5-6 months, that there was a consistent increase in open interest for Reliance Industries, and that added towards pressure to the stock price. And every time the stock went up, you saw the stock going through selling pressure. This time, what happened is at the end of May expiry, there was a sharp reduction in open interest for Reliance Industries, which means that the shorts had squared off their positions. Now it was a matter of time that you see evidence of long built up happening on Reliance. Last 2 days, we've seen some long built up happening on the stock, and which is why the stock has moved up higher, because the shorts had gone out and the longs were given an entrance to try and enter into the stock. So I think this is a very strong and a sustainable move for RIL, and I would sense that now over the next few weeks and months, at least for the next 3 to 4 weeks, you should be looking at the stock probably trying to come back to its all-time high levels as well.
All right. Our next query is coming in from Padma Balan. She's saying that she has 100 shares each of Union Bank, Bank of India as well as PNB. Wants to know whether it makes sense to continue to hold on to either of these stocks, and what's the take coming in on the PSU Bank as a whole. Raghavendra, what's your take coming on these stocks? Does it make sense to stay invested in Union Bank, Bank of India and PNB?
Well, it makes sense to stay invested in the public sector banks, specifically of the three names you mentioned. Punjab National Bank continues to be our top pick, but broadly, one can hold all the three. If you see the move of State Bank of India, which is like the poster boy for PSU banks across, the stock has done well, and the NPAs have reflected that they have bottomed out. The net interest income across the PSU banks have grown up significantly over the last 2 quarters. So we believe that the investor, the caller, can continue to hold their positions in Union Bank, Bank of India, and as well as PNB for at least 1 year. And we believe that based on the sectoral rotation where money is moving from sector to sector, PSU banks have a big headroom to catch up versus their private peers. So that performance could be reflected in the stock price gain. So one can hold PSU banks from here on, and PNB continues to be your top pick among those.
Okay, Rajan Vittal has got a question for you, Kunal, and this is on KOTAK. He says that he's finally seeing movements of close to 1800, and he's asking for the short-term outlook. I'm assuming that he is invested right now.
Good start to hold up. The stock was an underperformer last 2-3 months, like what we routinely see for many of the banking stocks as well, where these stocks corrected by almost 15 to 20%. I'm talking about the private sector banks. So Kotak Bank had already done it. Now what's now we are into a scenario where the markets are clearly distinguishing between the leaders or the performers. So you see ICICI Bank leading the charge from the front. You then see follow through price action coming into Axis and IndusInd Bank, and then Kotak Bank, I think, in that sense as well. So I think in that aspect, Kotak Bank, even though it's a laggard, but it's trying to look quite strong on the charts, breaking above the 50-day moving average. So that's one very important technical hurdle, which the stock has given a confirmation of a breakout. So I would suggest that if you're already invested, I would suggest to hold on Kotak Bank at current levels.
Right. The next query is coming in from Sagar, and this is he wants a technical view on Heidelberg Cement, Kunal. He's saying he took a contra trade, shorted 3,000 shares in cash in the morning at 280 with a stop loss of 284 rupees per share. He wants to know, should he hold it for more downside or book profits at the current market price? This is for Heidelberg Cement.
I think I think it's a cash segment stock, so of course you will have to square it off at the end of the day, assuming you don't have delivery of the stocks earlier. But I think on an intraday basis as well, I think it's a good trade, because from 280 levels, which was the opening high, the stock has come back to 260 odd levels, and it seems to be now coming back into some mild support territory. So the gap which was created on Heidelberg Cement today, when the stock opened up higher from that 255 to 258 to 59, the gap is trying to get filled for the stocks. And a gap filling exercise is generally a routine exercise with the stock tends to go through. It generally also indicates that the stock is tapping back into strong support levels to check whether there is a demand coming back into that support territory or not. So I think if that's the case, then it's prudent enough to try and book your profits over here, or might if you're looking to carry it throughout the entire trading session, then I would suggest that have a trailing stop loss of 265, and then you can carry on till at least 258 to 55, which should be an intraday target zone.
Okay, Vishnu Kannan seems to be wondering whether Alex Matthew is the same as the Alex Matthew on social media. They are one and the same, I must say. And Vishnu is looking for a view on Motherson Sumi to trade right now. Kunal, would you recommend a fresh entry into Motherson Sumi?
I'll recommend a fresh buy on Motherson Sumi. I think at current levels of 238, it's been one of the phenomenal, auto anch stocks, which has, looked very, very strong. The texture of the stock changed completely and dramatically from that February, highs, when the stock had broken past about that 165, 175 hurdle. I think if I'm not wrong, it was just around doing the result as well that the stock had given that breakout, and post that it's just not looked back. So after that breakout in the month of February, it's gone through sideways price action. This is generally a very good sign, because if the stock rallies up higher, changes its range, goes through a sideways price action, it's confirmed two important signals. One of them is a breakout and the other is a time correction. And on both of these accounts, I think it looks very attractive from a medium-term view. So I think if you have a time horizon of another 6 months plus, then I think Motherson Sumi could be a good bet at current levels.
A lot of queries from the FNO universe today, Kunal. So the next one is for you. This one is from Sherry. She's saying that I think 200 breakdown in Reddington is confirmed today. Can I put 10% of my capital in it now after seeing a breakdown, is what Sherry wants to know. This is for Reddington.
So the question is that he wants to sell. Can you repeat the question, Cheryl?
Wants to know whether she can put 10%. She's saying, can I put 10% of my capital in Reddington now after seeing a breakdown in the stock? So does it make sense to invest at these levels in Reddington?
No, so I think it's a breakout again for Reddington. 2 days of very strong price performance from 180 just in last week or mid of last week. The stock has jumped up to 260 level. So it's a definite breakout candidate. But then you have to understand that when you're participating in a stock which moves up from 180 to 260, that's almost a 50 to 60% kind of a move in a very, very short span of time, 3, 4, 5 days. Then it becomes very, very tricky to try and time the stock to perfection. And if you're trying to add up to a huge quantity at such high levels, then the risk reward is very skewed. What I would suggest is that have a staggered approach, because these stocks, they would have a tendency of going through a rally which could be very fierce, but then the correction also could probably be very intense for these stocks. So I would suggest a buy and dips approach for a stock like Reddington. You can start at current levels, maybe 2.5% of your expected capital is what you can deploy, and then keep the buying at 3 different tranches. You can at every 20 points dip on the downside is where you can look to average and then get back your entire capital. That way you will probably enter the stock at much better levels, as well as you'll probably buy the stock on decent corrections as well. So I would suggest a buy, but not at current levels the entire quantity, but a buy and dips or a staggered approach.
Okay, sorry to keep you waiting, Raghavendra. This one is for you. We've got Raghupati who's asking about Graphite India. Bought about 70 shares at an average cost of 805 and has been holding since 2018. So I think the problem is that he's held through the kind of volatility that we've seen, the absolute highs of Graphite India and the lows also. He's held through all of that. But now he's wondering whether to switch out and bet on an IT leader, and he specifically named Infosys.
Well, that's a very apple to orange comparison. But specific to Graphite India, since the investor caller has held the share since last 3 years, we believe that the next 2 to 4 quarters could be the time for him to reap the fruits and benefits of this long holding period. The management has come on board and given a very bullish commentary in terms of the graphite electrodes market. They continue to be among the top 3 or top 4 graphite electrode manufacturers across the world. The other foreign peers are all in developed economies where versus which Graphite India has a very high advantage in terms of lower cost of production, access to raw material, and access to the finished good market as well. So the overall margins of Graphite India could do very well in the next 2 to 4 quarters. So the investor can hold to see some outperformance, and this could be even outperformance to the metal stocks of broader sector. Now versus Infosys, that's a separate question, but we believe that Infosys also has some poise, considering market as at an life high levels. We would like to move into some defensives, and Infosys, considering its buyback going on, is a safe bet in the IT pack. And even if market goes for any kind of correction downside, Infosys could do well, considering IT and defensive bet on Infosys.
All right, the next query is coming in from Pavan Kumar. He's saying, I bought LIC Housing June 500 call after seeing the bullishness in the sector. Also, what is happening with PNB Housing? So, what's your take coming in on LIC Housing June 500 call, Kunal?
So I think if he's bought it earlier, then I think maybe like on Friday or last week, then it could be a good play to try and hold on to the stock. But if he's bought it, say at the start of the day when the stock was at 480, 485 levels, then I think it could be a bit tricky, because the stock has now gone to a retracement mode. And typically what we've seen, that whenever the stock gives a breakout, or even tries to touch back its previous resistance line and retraces from there, it would probably take a lot of time to for the stock to try and gather steam, consolidate at those lower levels, and then get ready for a breakout yet again. So my only worry is that you would have to wait for a longer duration of time than what you would have probably expected when you would have bought the 500 call option. But nevertheless, I think if you if you can hold on to it at current levels and then consolidate and let the stock consolidate for some more time, I would sense that the next round of a rally which happens for the stock could probably take the stock back towards that 490, 500 zone. That's where you can recuperate a lot of your losses.
All right. So the next question, Raghavendra, I think I can answer this, but I'm still going to send it to you. Manjunath has got 1,000 shares of HDFC and HDFC Bank, and here I'm assuming that this is a combination, and they've been holding for a couple of decades now. The question is, should you hold on to this like a portfolio stock, and can it be carried into the next generation?
Well, much of the answer is in the question itself. Since, as you rightly said, Alex, since the investor caller has been having these shares since last 2 decades, so there is no significant reason for the investor to get out of this stock. Enjoy the ride. These stocks have great corporate management, where other private bank peers have struggled to have a sustainable growth over 4 or 5 years on a uniform period. HDFC Bank has shown, even with change of management, they can continue to do very well and be among the top banking stock in India. Same thing with HDFC Limited. Decade after decade or years after years, we have seen this continue to be a core portfolio stock. And when we say that, we believe that this can be passed on to the generation ahead. And again, on the dividend side also, they have been generous. So yes, continue to hold this stock, maybe at least for another 5 years. They would be in sync with the market, or if at all, could outperform the market as well. So recommendation would be to stay invested and enjoy the upside ride.
Right, the next query is coming in from Balan saying that he's bought 300 KNR construction shares at 225 rupees per share. Wants to know whether he should continue to hold on to it or switch to another stock. Kunal, what's the take coming in for KNR construction?
I think it's a good chart, decent kind of a trend which was seen for the stock. Even this last 3 months of price correction, the stock did not correct significantly, and it in fact managed to bounce back just about closer to its 50-day moving average. In fact, it didn't even retrace back towards its 200-day moving average. So that was a very strong signal for a stock like KNR Construction. So it's a decent chart, steady, and I believe if the stock manages to hold on to this steadiness of the trend, you could be looking at a potential retest of 240 to 45 zone, which was the previous high for the stock. So I would suggest to hold on the stock.
Okay, the next question is also for you, Kunal. Aster DM at the current market price of 147. Santi wants to know whether this is a good entry point on the technicals for an investment.
Well, not really. I believe that the stock is still struggling, last 2 months as well. Even though the stock has gone through a bit of a bounce back, but it's been very, very feeble kind of a bounce for the stock from 135 to 145 has been the bounce, and it's very lackluster because of the spread of volumes. The volume spread for the stock is not as consistent as you would want to see for stocks when they go through a process of bounce. So would recommend to avoid the stock, and if you're looking to add something from a slightly medium term play or even from a positional play, then why not look at Reliance Industries? I think even at current levels, I believe that near term wise you could be probably looking at a further upside of another 5 to 7%, and there is also a stronger degree of stability and far more resilience into this large cap name as compared to any of these other mid cap stocks.
All right, the next query is for you as well, Kunal. This one is from Jyoti. Wants to know about Adani Ports on the technical front. Is there ascending triangle pattern, and if so, what is it indicating?
The stock has been forming this ascending triangular pattern, but then what happens is typically when you see these kind of patterns, you ideally should wait for two important set of parameters. One of them is any prior indication in terms of volume. So what happens is in an ascending triangular pattern, typically when closer to the breakout of this pattern, you would see some heightened volume action. So that is the first set of confirmation which you need to see. And the second is you need to see how the stock behaves closer to a breakout, because if it's a very important resistance line, then the stock has to break past above that resistance line with a very strong set of fervor. You can't have the stock just nimbling towards the breakout and then retracing back again. So that's the concern with a stock like Adani Ports. So volumes have been a bit lackluster, and the stock has not confirmed a breakout above the 785, 790 zone, which is the top of this ascending triangular pattern. So the pattern is there, but it's not a classical pattern which we typically look out for.
Kunal, I want to come to you on another Adani Group company, Adani Transmission, and this is a stock that has gained over 230% in the year-to-date period, up over 700% in the 1 year period. What do you do with this? Can you read the technicals on this? Would you trade this?
Very difficult. In fact, I think a lot of these Adani Group of stocks Alex have done phenomenally well, and it's difficult to fathom such kind of high potential breakouts, because I was looking at the charts. For example, for Adani Transmission, you look at the monthly charts, and we are discussing monthly charts over here. The RSI on the monthly time frame is around 90 to 93. Now, we typically say that a level of 80, 85 on RSI is level of 90, 92 RSI on the monthly chart. So that itself is very, very or highly overbought territories. I generally wouldn't recommend stocks which are at such high and extreme RSI zones. They eventually would go through a period of sharp corrections, or at least a time-wise correction. So the risk reward is not suitable for someone who's looking to enter the stock purely looking at the momentum, because it seems to be that the stock has come back to very, very high or extremely overbought territories.
Of the query segment, but let's take the high risk and low risk ideas from our experts. Raghavendra, what are your high risk, low risk ideas for viewers today?
Beginning with my high risk high reward idea, that is Hindustan Construction Company, HCC. This engineering construction company is currently trading at around 11 rupees. We believe there is a 100% upside in the next 12 to 15 months for a target of 24. HCC has last week come out with its debt resolution plan, where they propose to move 4,000 crores worth of debt into another subsidiary company. That would significantly reduce the debt of HCC, and which has been the pain point over the years. Another good trigger for HCC is recently they have won an order from Chennai Metro worth rupees 585 crores. HCC also has a subsidiary in Zurich, Switzerland by the name Steiner AG. If this subsidiary is sold or a stake sale happens there, again the debt would go significantly down, ease of management bandwidth. So HCC is our recommendation for a 100% upside in 15 months for a target of 24. Steady order execution, reduction in pledged shares, reduction in debt levels, and entry of professional and young management brings the freshness of ideas as well as the urgency of restructuring. All these triggers taken together would take Hindustan Construction Company to levels of 24 in the next 12 to 15 months. Moving on to the low risk, low reward idea, we have Bharat Petroleum, BPCL, which is currently trading at 470 rupees. We believe there could be an upside of 60% in BPCL for a target of 750. Trigger 1 would be the disinvestment by the government of India, which holds around 53% in BPCL. Recently, BPCL has come out with a dividend of 79 rupees. That's a super generous dividend, considering a yield of 18% on the dividend, which makes it among the highest dividend paying stock in the Indian Stock Exchange. Plus, crude oil going north on upward would augur very well for BPCL, as also reflected in its Q4 earnings presented last week. There are considerations that BPCL might sell its stake in Petronet and Indraprastha Gas. If that happens, we could expect another bumper dividend from BPCL. So a very generous dividend policy, disinvestment plan, good Q4 earnings, and crude oil going up and up. We believe BPCL could touch levels of 750 in the next 12 months. That is 60% upside as a low risk, low reward idea.
Understood. Kunal, coming to you on your high risk and low risk ideas, what do you have for us today?
So two buy calls. First one is about Muthoot Finance stock heading towards a breakout yet again about that bullish fly pattern. So buy with a target of 1350. Stop loss could be kept at 1270 approximately. And the second stock is a Kajaria Ceramics. That stock is showing a very short-term breakout. We typically call it as a swing breakout on the RE time frame charts. So would suggest the Kajaria Ceramics as well. Targets to be kept at 1020 and stop loss at 945.
All right then. Thank you, Kunal, as well as Raghavendra, for joining us on the show, giving us your high risk, low risk ideas, as well as resolving viewer queries. And on that note, we'll slip into a break in this edition of Buy Now, Sell Now. Stay tuned, more on the other side, so don't go anywhere.
Co-powered by LG Air Conditioners, all in one in all.
He knows.